Good morning, guys. It's Friday, October 11th, 5:28 a.m. Central Time. Grain markets are mixed to higher this morning. Brian Split is here. Guys, let's start off with this trade story.
So, the U.S. Chamber of Commerce believes that Trump and Harris will both be detrimental for trade. According to the lobbying group, Trump's tariffs would hurt American companies that import components and parts. A Bloomberg analysis found that Trump's proposed 60% tariff on Chinese imports and 10% tariff on all other imports would raise inflation. The lobbying group said that Harris would be anti trade because of her avoidance of new free trade deals. In the past, Harris has voted against such agreements because they didn't address climate change. Despite free trade agreements opening global markets for U.S. goods, Harris believes they cost Americans manufacturing jobs.
At risk of wading into politics here, we're going to discuss this because it's policy and it does matter. One of the things that went underreported, Brian, was this tariff hike that happened just a couple weeks ago. The Biden administration hiked tariffs on a whole bunch of Chinese imports, everything from battery parts, electric vehicles was the big headline one. But this kind of went underreported. The Harris administration or the Harris campaign, rather, hasn't really talked much about this. Trump is very vocal, of course, with his desire to start another trade war with China, basically. I mean, how are we supposed to think about this?
Yeah, there was a period a few months ago, as when President Biden was still in the race, and it was like everybody was trying to look for, who had the edge. Is it President Trump? Is it President Biden? And the whole thought of that was, well, if Trump gets in the office, we're going to have trade wars again, and this and that. But what we've seen here is that the Biden administration did not stop the Trump era tariffs, and
No.
as you just showed, if anything, they increased tariffs. So I think that whole argument of like trading back and forth of Trump versus Biden at that point, really it was more rhetoric than anything, and there wasn't a whole lot of realism built in that. I don't know. I mean, I think it ultimately again boils down to China will buy beans from wherever they can get it cheapest when they need it, regardless of trade wars or not, is what I think.
So during the trade war, I didn't update this chart, but you get the idea. So soybeans were really cheap, $8 to $9 per bushel, and a lot of that it was trade related, certainly, but also China had African swine fever during that time frame, and they were able to avoid U.S. soybeans to a significant degree. And I'm not saying that if Trump gets elected, we're going back to those levels. That's far from a guarantee. Um, the thing is that we have to rely on China. We do, and it's unfortunate. I mean, people don't like that idea, but who else is going to buy the beans? We're not using enough domestically yet for biofuel to offset the need for exports. So it's like we kind of need them, you know?
Yeah, and you mentioned something really important that gets, I think, lost in everyone's memory of what happened in that 2019 timeframe. The African swine fever was huge. I mean, when you think
Huge.
about what happened to the size of their hog herd and the way that they changed their rations because of that, that was a major shift in their general policy. And so, as easy as it would be to just point at the trade war, and yes, that had a hand in it. That was a big part of the psychology of the market at that point. I remember sitting there in my family room, and there would be a tweet from President Trump, and the market would break 30 cents in soybeans, and then it would come right
Mhm.
back. It was extremely volatile at that point. But from a pure usage standpoint, that swine fever was absolutely massive. And then look what happened. You could see that the chart was down in those 2019 lows, and then as soon as the trade deal with China was negotiated, the amount that they bought afterwards was staggering.
We've had a lot of questions come in from subscribers, premium subscribers, about like if I'm a farmer, who's the better candidate for me? And again, without trying to get overly political, I did a video with Paul Neefer about this about 6 weeks ago, and actually, big picture, the Democrats' desire to get rid of the step up in basis is a huge deal. If you're going to die someday, which you will, and you own land, this is a huge deal, and this is what the Harris campaign is pushing for, essentially, is to eliminate the step up in basis, which could have monster tax implications. So when it comes to like the soybean market over the next year, maybe a Trump presidency is not a great thing. We don't really know yet, but big picture over the course of years or even decades, I mean, that stepped up basis deal is huge.
Yeah, I mean, we think about the presidency and policy, and we tend to think of that in terms of price. But there is a lot more to the health of an operation than just what prices we see for our products in one administration to the next. And these longer term tax ramifications are absolutely huge when you think about the multi-generational operations that we're dealing with and how that's passed down and things that producers have to do in order to transition from one generation to the next.
Okay, I think we got through that without endorsing or not endorsing any candidate. I'm sure there will be some fiery comments in the comment section today because people get fired up whenever you talk about this stuff. Let's go to export sales.
Mackenzie for president 2028.
Yep. All right. There we go.
Let's go, guys. U.S. export sales were mostly as expected last week. Net corn sales were reported at 48 million bushels. The print was down 27% compared to the prior week, and unknown destinations were the largest corn buyer for the week. Net soybean sales were reported at 46 million bushels. The print was down 12% versus the previous week. China was the largest soybean buyer for the week. Net wheat sales were reported at 16 million bushels. The print was down 2% from the previous week, but up 31% from the prior 4-week average. Mexico was the largest wheat buyer for the week.
Soybean sales are probably still the problem. We run this chart every week, and I updated it again. So sales to all destinations of soybeans are the third worst of the last 10 years. We're a little bit better than last year, but probably not on pace to hit USDA projections, although it's very early. We mentioned China. Sales to China are the third worst of the last 10 years. They're better than 2018 and 2019, still slightly below last year. So we don't have a trade war right now, and China's not buying a whole lot from us, Brian. Is this all just contingent on the idea that Brazil's going to have this monster crop?
Yeah, I mean, what's the USDA have the U.S. exports for soybeans above
Slight
last year?
increase versus last
9%,
year.
I think it was.
Yeah.
So yeah, we are running a little bit above last year. I think the problem is going to come again down the road where we're in that window right now where China's going to buy U.S. soybeans. There's the gap that they need to fill from kind of the back end of the last Brazilian harvest until the next one comes online. And that's really our window of opportunity. So hopefully we can sell as many beans as we can to China in that period. But, should Brazil have another large crop? And when we think about, what is a large crop this year versus last year, I mean, we're talking the potential of 170 million tons versus a little over 150 million tons for their harvest that we just had. So, you tack on another, let's just call it 15 million tons of soybeans available in the world marketplace. I think we're going to have another issue where China is going to be absent as we're looking to our 2025 marketing program, and their sales ahead of time. And we may not see them show up until, again, mid to late summer next year. So there's going to be a long period where I think things are going to look negative in the bean market next spring.
Soybean export window is open right now, but it's not going to be open for more than another 2 or 3 months, the way that it looks.
Correct.
We got a report today.
We sure do. USDA is going to release its monthly crop production and WASDE report this morning at 11 Central Time. Traders are expecting minimal changes to this year's U.S. corn and soybean production estimates. The new crop U.S. corn carryout estimate is likely to be reduced amid lighter than expected September 1st stocks. Some traders have discussed the idea of upward adjustments to the demand side of the new crop corn balance sheet, given strong data via exports and ethanol. Changes to both supply and demand on the global balance sheets are also possible.
To just talk about the crop specifically, do you foresee any big changes today, Brian?
I don't really think I don't. I think the trade was looking for maybe a very small reduction in yield for both corn and beans, 0.2 on corn and 0.1 on soybeans. So I guess there's two things to pay attention to. Is the trade's not looking for a major adjustment, and in both corn and beans, they're looking for yield to come down a little bit. So that does set the stage where if yield is unchanged, or if for some reason it moves higher, that's going to be seen as a negative. But the USDA increased demand for corn over the last several reports, and by pretty good amounts. So I think we're probably going to see the demand side of the balance sheet maybe take a break for a little bit. I think very small revisions on the production side. I'm really not looking for a major change to our balance sheet. And there's things we already know. We already know that the carrying for corn is going to come down just based on the quarterly stock number. So it'd be interesting to see you get a carryout number for corn below 2 billion bushels. That's 300 million bushels less than we were looking at several months ago. And here we are, we've seen this market almost 50 cents off the lows from August. So we've definitely priced in a reduction in carry out here over the last couple months.
I try to avoid discussing yield reports at all costs because I feel like as many as I hear, I'm never going to see or hear a complete picture. But the corn yields that I'm hearing are fantastic.
Yeah, I think I had one conversation yesterday, and it was a producer in Minnesota, in Bird Island, which is, an area that there's an area every year, and unfortunately, it was their turn this year.
Mhm.
But man, you're right. The corn yields that I continue to hear are staggeringly good. If there's any question about yields, it's probably more on the soybean sides than it is corn.
Soybeans, again, I don't like talking about them, but from what I've heard, are more variable. There's more bean yields that, from what I've heard, that have come in kind of worse than expected. Maybe that August weather had something to do with it. I don't know. It was kind of hot and dry toward the end of the month, so it may have an impact. Let's jump to this wheat story.
Global wheat production is expected to decline due to unfavorable growing conditions. Drought conditions are impacting wheat crops across Russia, Argentina, Australia, Ukraine, and the U.S. There's also concern over limited supplies due to recent Russian attacks on grain ships in the Black Sea. Last week, supply concerns caused Chicago wheat futures to climb to their highest level in 4 months. Nations such as Australia and Canada are holding off on sales in hopes that prices will climb even higher. The USDA is projecting world wheat ending stocks to fall to a 9-year low of 257.2 million metric tons this season.
Despite some of the weather problems in Russia, the Russian government was out yesterday and again overnight talking about the wheat crop, and they lowered their estimate. They went from 84 down to 83 million metric tons. USDA is at 83. They don't seem to think that this dry weather is going to have a big impact. The global wheat situation is projected to be as tight as it's been in 10 years, yet wheat prices are not at 10-year highs, Brian.
And it's, if you look at what wheat prices were 10 years ago, they weren't very high either. So there was kind of other dynamics going on. 2014 was just a bear market period. But I think if there's something that's going to be friendly on the report, the world wheat is kind of the bright spot to me of the grains. And if we see some further reductions in some of our other competitors out there as far as their wheat production, I think the wheat market's going to be the one that can help corn continue to have this uptrend that we're in right now.
So we may have some supply issues in wheat. The question is, will there be demand here as the prices move higher? I know Russian export prices have ticked up a little bit. Is the demand going to come in here with these higher prices? That's going to be a big question.
USDA released weekly drought monitor data yesterday. The majority of the Corn Belt received no measurable rainfall last week. As a result, drought conditions worsened across a large portion of the area. The lasting impacts of Hurricane Helene caused drought conditions to improve in Kentucky. The High Plains experienced warmer than average temperatures with little to no rainfall for the second consecutive week, causing drought conditions to deteriorate across the majority of the region. When we look at the percentage of U.S. areas experiencing drought, corn country, 49%, soybeans, 43%, winter wheat, 47%, spring wheat, 29%, and cattle country, 43%.
The next 7 days are going to be dry. Oh, that's versus 2012. The next 7 days are going to be dry, but the GFS has thrown a bunch of rain, not a bunch of rain, but some rain in beginning around October 20th, and that's an extended forecast, which may or may not be correct. That's good for two reasons. We could use a moisture recharge in the Corn Belt, especially in the northern river valley areas because of river levels. Also, some of HRW wheat country may catch some rain. The river is going to be back to restrictive levels here the next few days. Brian, what do you think the biggest impact of this drought is right now? Is it the river? Is it crops? Is it a little bit of both?
I mean, right here, right now, it would be, to me, the river. The crops at this point have already gone through their major growth cycles, and we're harvesting, right? So I think it's going to be the river, and especially if we can get some of that replenished and get the river levels back up, that would be very helpful for our exports. Man, it's just interesting when you look at those drought monitor maps. I mean, you think about how quickly we went from like drought to no drought in July, and we had 5% of corn and soybean acres were in drought, and now we're back up to, what was it, 40 some odd percent. So It's moved very quickly in both directions.
Yeah, definitely has. We had some economic data out yesterday.
We did. According to the September CPI report, consumer prices rose 0.2% for the month, surpassing the expectation of a 0.1% increase. Year over year, prices increased 2.4%, higher than the anticipated 2.3% rise. At 2.4%, inflation is now at its lowest level since February 2021. It was also reported on Thursday that weekly jobless claims hit a 14-month high at 258,000. Analysts believe the uptick in claims is due to Hurricane Helene and a strike by workers at Boeing.
So CPI, the annualized percent change is the lowest it's been since March of 2021. That doesn't mean that things are cheaper, though. The index is still at a record high. It's just that the slope here, the steepness of the slope has been reduced a little bit. Jobless claims ticked up. COVID ruined this chart, though, because we were 6 million in 1 week back in 2020.
Yeah, you lose
Brian,
all sense of scale there, right?
Yeah, I was gonna do one like 2020 forward, and it does look. I'm not gonna say it looks bad, but it's not as strong as it was. So the Fed's gonna cut some more. The way that it looks, they're slightly worried about the labor situation. They're not worried about inflation anymore.
No, that was the comments, is that the inflation's reaching, getting close to their 2% goal. I would like to see them have a goal of like a negative inflation number. That would be pretty cool.
No, they don't want that.
No, but like it would be nice to see the price of things actually come down.
No, it won't.
That I have to buy. No, it won't. But
It won't. They don't want negative inflation. They before COVID, they fought to keep inflation up to like a 2% type level.
Right.
That's what they want, because they want economic growth. Without a limited amount of inflation, you don't see economic growth is the problem. So
it's funny when you think back to all the conversations and everything that they were talking about. We need 2%, and then inflation's transitory, and then it just got out of control. And these are people that are human beings, just like you and I, that are trying to control something that's extremely tough to control. But
one of the things about interest rates is interesting. So the Fed's cutting, but the longer end rates are moving higher and drastically higher. Yield on the 10 years up to like 4%. It was like in the low threes just a couple of weeks ago. So there's a lot of interesting stuff going on. I don't know if like operating loans are going to get any cheaper anytime soon, or mortgages. Mortgage rates actually have gone back up a little bit,
right,
despite the fact that the Fed is cutting. So there's a lot of pieces kind of moving here. What did cattle do yesterday?
Cattle futures were higher. Live cattle were 55 cents to $1.05 higher. Feeders were 62 cents to 132 higher. Box beef was higher also. Choice ended the day at 309.95. That was up $1.77. Select ended the day at 290.73. That was up $2.10.
Cattle market thoughts, Brian?
December live cattle's had a very difficult time with the 188 area since about May. I would really like to see it crack kind of that 190 nut and be able to look for values in the low to mid 190s. But history would say that this is an area where if you've got some coverage that might need to be extended to the downside, we're at the upper end of the range right now, and probably not a bad time to consider it.
Outside markets are fairly quiet this morning. U.S. dollars about flat. Stocks are off just a little bit. Bonds are flat. Crude oil is down 64 cents in the December WTI, 74.47. Remember, guys, report at 11 today. Have a great weekend. We'll talk to you on Monday.